Good morning and welcome to the first ever pre-recorded episode of the Pre-Market Prep. We will be out of the office, but let me get you everything you need to know for today's session. Friday, July 25th, we have 8:30 durable goods. I think it's going to be a nothing burger for the market. I would not be overly concerned. Any swing traders kind of have a reprieve into early next week. Monday is quiet, but the calendar does pick up as we move into the rest of the week. So swing traders are kind of doing okay into the first session, but then it's the labor report, of course, the FOMC on Wednesday as well. Just have that in the back of your head as we prepare. If we look at the earnings calendar, Intel after the close yesterday, that is moving by itself, but the broad market is pretty flat, as we'll see here on the top line figures. 12 basis points on the Dow, S&P 10 basis points, Nasdaq futures flat, literally only up 1 basis point. Oil futures hardly moving, up 24 basis points, and the 10-year pretty stagnant. Also, it's pretty quiet as of right now, and Intel is really the only major item in the news headlines. Other than that, the quick spat between Trump and Powell at the Fed renovation visit, it's not really something that the market cares all that much about right now. So with that, let's take a look over at, of course, our good old friend, the ES futures on the 4-hour time scale. Obviously, you're in an uptrend here. If we take a look at the hourly chart, you're still in an uptrend here. I want to stay on the hourly for just a second because, of course, if the market pulls back today, everybody should be focused on Monday's high, please. That's at 63.74. The way we get there is likely if we break underneath yesterday's low. You could see if we drop this down to the 15-minute time scale, and if we were to ask ourselves the three questions we typically do, we're opening in range, we're opening in value, and we're opening sort of in the midpoint-ish, maybe the lower half of the overnight session. The overnight session attempted to break the previous day's high, comes back into range. It's very, very neutral. So based on the first 2.5 questions, I would think P for patience is a virtue on today's session. If we break out the brass abacus on this pre-recorded session, what's the overnight inventory? I'd probably argue neutral because of the rollover that happened here, but it might be slightly net long depending on if we're still over the previous day's settlement as we come into this morning's open. So therefore, I would really wait for the trade to develop on today's session. I would not jump the gun. Patience will reward traders this morning. If we take out not Friday's low, but Thursday's low, that's where I believe you actually have a short that's available for a move from point A to point B for the retest of Monday's high at 63.74. Previous day's low is at 63.9650, give or take. So that is a possible short, but I wouldn't overstay my welcome. You can see we have some sort of thin structure on the breakout from, of course, that Wednesday session. You might get a little bit of a hang up here. This is the 85 level that we were talking about yesterday. So just have that in the back of your head. I would prefer to trade the ES on the short side based on the distribution and the look of the daily candle. We take a look at the S&P 500 on the cash side of the market here. You can see we've got ourselves a shooting star. You could call it an inverted hammer, a gravestone doji, whatever you want to call it. If we take that out, I would really be focused on that rotation to the downside. Again, Thursday's low becomes the critical spot. Or another little nuance here that you could actually tack on is, of course, if you do something that looks like this, it's the base of the spike. So if you want the little insight, I would technically use this level right here around 93.75 is what we called for in the, the Wednesday midweek market update. So let's say spike base there. Let's show that on the right. And just so we have that in maybe a different color, let's go cyan, crayon, dotted, and of course, with a little bit of transparency so it's not blinding. Then we'll move on over to our Nasdaq. Okay, obviously, if the market remains inside of this consolidation, it's not going to be a short. And I want to be very clear. I've maybe suggested that this could possibly be a short, but we just talked about how the market is in a 4-hour uptrend, on a 1-hour uptrend, a daily uptrend. You're not overstaying your welcome on the short. As a matter of fact, you might even avoid the move from point A to point B and rather look for the long off of point B, right? Which, of course, from a pathing perspective would just be, okay, let's let this go, and then let's look for the reversal here. You want to be long from the white circle up to the previous day's low again, and then possibly monitor for continuation. If we're getting sideways consolidation here, I think it's a junky day. There's not really much to do. Price discovery should continue in the upward direction should we get a higher low over the previous day's high. And also, I would carry forward that in the overnight session, we technically made a new all-time high that typically will not last as the true high of the general move. If we look at the market internals from yesterday, I just want to key into this for a brief second. They do offer some idea of distribution, volume outflows, weak advanced decline line, and a red cumulative build into the close on the index score. It technically was very weak on the green side as we were balancing yesterday. If you look at the cumulative tick, it was also somewhat red. You'll see the same thing over in the Nasdaq side of the exchange. Let's quickly jump in here. Your Spider's cash equivalents. Obviously, it's your spike of the base of the spike. 633.75 comes into Monday's high at 631, looking for reversals off of that in the upward direction. Should we stay over 633 once again, that is a fairly neutral indication. Let's jump into the NQ very quickly. I would prefer not to short the NQ. If there is going to be this pullback short, it's probably on the ES. Why? Well, you can see here that this is still an extremely poor high from back here. You are still in an uptrend on the 4-hour and the 1-hour. I need to save the time and maybe not take a look at that real quick. If we're inside of range, inside of balance, I just wouldn't really do much in here. If we do start to pull back, you have a lot of arbitrary places that could offer some support. Slightly under previous day's low is this high from the EU tariff announcement. Then you have this level in here, which was value area high. Then you start getting into this support zone, demand zone down here. I really just don't like the premise of shorting the NQ, and you could really see this maybe on the hourly. So let's just go there for a second. You've got these really sort of stubborn balance ranges underneath you. It just does not really look good here for a short. So if you do need longs, you could say, okay, let's maybe forget about the ES and let's try longs in the NQ over to repair this poor high reference point at the previous day's high. That's really up around 425. Okay, let's quickly look at the QQQ cash ETF. I'll give you a couple of my top watches in the core list, and then we're out of here. QQQ, same thing, different number. 566. If we can Brigade bolt over that into blue sky territories, it's a little bit more compelling on the long side. Here it is on the hourly chart. You can see again, I don't want to be short in here. I don't want to be short into previous day's lows. I don't want to be short into this inflection point. I don't want to be short into this. I mean, if the market pulls back, so be it. And, in hindsight, yeah, oh, great. It looks like the market came in a little bit. But in real time action, I really don't think that there's good sound logic to be shorting into these particular levels. I would really want to see this turn into a double top, if anything, before starting to change my bias slightly on the smaller time frames. Right, so that's your QQQ. Russell futures, just to be congruent, and then we'll be sort of speedy through the rest. You really just have to watch this level. It's the same level we've been watching, around 2265. If we stay over 2265, small tailwind, bullish side for the S&P 500. If we're underneath, a little bit more of a headwind. Okay, if we take a look at the IWM, it's going to be very similar. Obviously, this is the same level as yesterday, 223.25. If we're above that level, fine, bullish, neutral for the S&P. Below, I wouldn't really be bearish here. I would start to maybe be a little bit more bearish in the short term underneath this 222 mark in the IWM. Top watch of the day has to be NVIDIA for you guys. If you take a look at this equal high breakout attempt, nice consolidation, nice hold through the pre-market over 173. I like what's going on so far. If we move into Microsoft, really isn't it? Let me just scroll through some additional watches that I had marked out here. Palantir will be a top idea. You can see, obviously, you have this Brigade bolt up and into blue sky territories. Nice high or low hold in the pre-market so far. If it does pull back, it's fine to come back in and retest once again, 152.50. It would persist as a setup, and maybe early next week we can get something that looks like that. So Palantir is a top watch, as well as Robinhood. If we come in here with Robinhood, you can see very tight balance range down here. It does look like we're opening a little bit weaker on the Robinhood side of things, but clearly over 102.75 should send it slightly higher towards this 107. Aside from that, I would maybe say AMD could be a watch on a pullback into 159 for an hourly high or low here. The consolidation over 161.85 is bullish, but I don't know that I would be chasing it high flying up on these highs after a straight up move to make a new higher high. So a little cautious of that location on AMD. Broadcom tends to be a little bit tough on the options, but you could see it's very similar in terms of NVIDIA. Any consolidation here, Brigade bolts into blue sky territories over 287.85 and then over 290, that unlocks your upside. I would say outside of the semiconductors and those hot names recently, Meta looks okay just because of how this level has been well defined at 714. And then, of course, if we come into, where is it? Google, post earnings, you're looking for a gap fill reversal hold of this 191.50. If you can get that, then you have sort of a pinch opportunity, a squeeze opportunity up and over 194.35 today. Last but not least is probably Amazon, because it did have a little bit of momentum yesterday. If this can sort of, and ignore this upper wick, that's a false upper wick. If it can Brigade bolt over 233.75, there is quite a bit of room on the daily chart up towards the all-time high in here around 239.85. If it's just consolidating and pulling back, maybe along off of 229.75 for an hourly high or low, low, but it would not be a top priority. I would really say that NVIDIA, Palantir, and Robinhood are the top priorities. So remember, Friday rules are enforced. Don't do anything crazy out there. Don't oversize your positions. Have yourself a green trading session, and I will see you in the next one.